Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. I hope you guys are preparing for the next examination in a very great manner. So, as a one more important resource for you all before you go for the examination, so we are creating this video where I will try to cover the peculiar aspects of MTPs. So, as we all are aware, two series of MTPs have been released for September 25 attempt. We will try to have a quick glance. A few important points are there, a few things are there which we could recollect them before we go for the examination. That will be much better, and even we can get a comfort over the questions, what kind of questions might be tested, so that comfort you will get it. So with that intention, I thought of revising quickly. I thought of taking you through in a quick manner. We will not go into the detailed manner, but we'll have a grasp of the content whatever has been given under MTP series 1 and series 2, which has been released for September 25 attempt. So having said that, let me start with series 1 MTP GST part. I will try to quickly take you through. So in that series 1 MTP, first we will try to start with our case scenario discussion. See, we have already watched the case scenario booklet. So for our students, we have even uploaded the case scenario booklet related explanation. In both series 1 and series 2, whatever MCQs we have, those are actually taken from the case scenario based MCQs only. But anyhow, I will have a quick look. I will take you through the quick facts now. So starting with the case scenario discussion, Rajnath & Co. registered supplier under GST is dealing in supply of taxable goods in the state of Karnataka. So he's a registered supplier with which state? Karnataka. The firm has opted for composition scheme for April month of the last financial year. Its turnover crossed 1.5 crores on 9th of May of current financial year and had opted for withdrawal of composition scheme on the said date. So as we all are aware, you can stay under composition scheme only when your aggregate turnover is within the prescribed limit of 1.5 crore. If it exceeds, you have to opt out of the composition scheme. And if you are well aware, so we will file one input tax credit related statement if you are opting out of composition scheme. Whatever inputs which are held in your stock and semi-finished goods, etc. So that statement we have to submit. Within what time we have to submit? Within 30 days from the date of withdrawal of the composition scheme, we have to file that GST IDC 01 statement. We have to file it, right? So now we have a one question regarding it. So if I come to the question here, Rajnath & Co. needs to furnish a statement containing details of the stock of inputs or inputs held in semi-finished or finished goods on the withdrawal of the composition scheme by what date? See, when he is opting out of composition scheme 9th of May as they have given. Now from this date, within 30 days, you have to file that GST IDC 01. So if I calculate that 30 days, so in May total we have 31 days. Out of that, take out 9. So how many days are over? 22 days are over. Plus 8 more days in the month of June. So on or before 8th of June, you are required to file that GST IDC 01, in which you will give the details regarding the inputs which are held in stock, semi-finished goods or finished goods. So answer will be C here. So if we have a, if we simultaneously try to have a key for our reference, so we can wind up the discussion very quickly. Yeah. So first option, as you could see here, option is C. Now coming to the next, let us go back to the facts once again. Rajnath & Co. removed goods on 10th of June for delivery to Chandra & Co. On sale or return basis, Chandra & Co. accepted the goods via its confirmation on mail dated 15th of September. So if you remember the provisions of section number 31, in case of goods is sent on sale or approval basis. So what is the maximum time limit within which we are required to give invoice? Either within 6 months from the date of removal or actual supply, whichever is earlier. See here, actual supply has taken place on 15th of December. But when 6 months will expire on from the date of removal of the goods. So if you take the goods are removed on 10th, from that maximum 6 months, if you calculate, it will fall on 10th of December. So invoice is required to be given either within 6 months from the date of the removal of the goods or the actual supply, whichever is earlier. Here 6 months will expire on 10th of December, whereas actual supply has taken place on 15th of December, whichever is earlier. 10th of December will be the due date within which we are required to give the invoice. So on that, we will have one question. In respect of the goods sent on sale or return basis, Rajnath & Co. shall issue the invoice by what date? By 10th of December, he is required to issue the invoice. Next one. The firm has paid GST for various items during the month of August. It is comprised of the following. So they have received various input services. On that, they have paid GST. That GST details they are giving you. GST paid on input services which are intended to be used for personal purposes. Will you get ITC on that? No. GST paid on purchase of motor vehicle for business use, being a two-wheeler having engine capacity of 25 cc. See, if it is a motor vehicle having an engine capacity of only 20 up to 25 cc, on that ITC is permitted. You can avail this input tax credit. So this 9,000 rupees, two-wheelers up to 25 cc engine capacity, on that ITC will be allowed. GST paid on purchases of computer, but here they are saying one thing here. GST portion was included as a part of cost to claim depreciation under Income Tax Act. That means the GST component under on the GST component, they are already claiming depreciation. Can you once again claim the input tax credit? No. So on this 19,000 also, I don't get the input tax credit. During May, Rajnath and Co has reversed ITC of 10,000 for not making the payment to the vendors. Within 180 days, you are supposed to make the payment. No, since you did not make the payment in May month, they have reversed it. But this pending payment was cleared in the month of August. See, when you have repaid that amount, you can re-avail that input tax credit or not. So in the month of August, they can also claim this 10,000 rupees of ITC extra. So in the previous thing, they have given the details for the month of August. From these three transactions, 9,000 rupees you can avail it as input tax credit. And also on payment, this 10,000 rupees also you can re-avail it in the month of August. Total 19,000 rupees of ITC you can avail for it. So if you have a look at the key, determine the amount of eligible input tax credit that can be availed by Rajnath and Co for the month of August. How much amount he can avail? 19,000 he can avail. So as you could see here, 19,000. Next, coming to the next facts. Out of purchases made and ITC availed during earlier months, the following information is made available. So they have already availed some ITC in the previous months. Regarding that, some details they are giving. XYZ supplier name, payment is due for 145 days. The amount is 13,000. They have already availed. Do they need to reverse it? No. ABC and their payment is due for 199 days. 15,000 amount. Is it required to be reversed? Yes. Within 180 days, if you don't make the payment, you are required to reverse it. PQR payment is due for 99 days. Amount is 20,000. Are you required to reverse it? No. Only which amount is required to be reversed? This 15,000 is required to be reversed. So if you see here, compute the amount of ITC to be reversed for the month of September. Ignore interest liability if any. So this 15,000 rupees is required to be reversed. Next, coming to the next facts. Rajnath and Co received accounting services from Prabhu and Co, an associated enterprises located in Sri Lanka. Import of services from associated enterprises. Prabhu and Co issued the invoice for the services on 1st of September, which was entered by Rajnath and Co in its books of accounts on 10th of October, but payment was made on 30th of September. What will be the time of supply? In case of import of services, that too which are payable under reverse charge mechanism from associated enterprise. So as per the time of supply rules, the time of supply will be earlier of date of recording that entry in the books of accounts or date of payment, whichever is earlier. Here the date of recording the entry in the books of accounts is 10th of October, date of payment is 30th of September, whichever is earlier. 30th of September is earlier, so the time of supply will be 30th of September. Time of supply in respect of service imported by Rajnath and Co from its associated enterprise. What is that? 30th of September. Next. L&T Limited generated e-way bill on 12th of February at 14 hours. It is transporting over dimensional cargo for a distance of 100 kilometers. The validity period of the e-way bill will be what? See, as we all are aware, if the shipment is happening through over dimensional cargo, for every 20 kilometers or part thereof, we get 1 day, right? So here it has to travel a distance of 100 kilometers. So for every 20 kilometers or part thereof, you will get 1 day. So total we have for every 20 kilometers 1 day we will get. So total we get 5 days of validity. And how to calculate that 5 days? See, it is 12th of February, right? So 1 day it was generated on 12th of February, 14 hours, right? So 1 day will get over on 12th to 13th. So 12th to 13th, 12th midnight you ignore, yeah, 14, 15, 14, yeah. So how it will be calculated is midnight following the date of generation of the e-way bill. See, e-way bill was generated on 12th of February at 14. So 1 day will expire on next day's midnight, right? So if you take it, so you have to ignore 12, 13 midnight. So 13, 14 midnight, 13, 14 midnight, 1 day will get over. Next, 14, 15 midnight, 2 days will get over. 15, 16 midnight, 3 days will get over. 16, 17 midnight, 4th day will get over. 17, 18 midnight, 5th day will get over. So it will be expired. This e-way bill will expire on midnight of 17th to 18th of February. 5 days of validity you are going to get it here. Right. Next one. Mr. Naresh, a supplier of ready-made garments, issued an invoice to customer and erroneously charged a higher value by 42,000. Such an invoice was issued on 28th of October. Which document is required to be issued? You collected more than required amount. What document you will issue? We will issue for this credit note because you charged extra amount, right? So if you want to give it back, if you want to collect less, you have to give a credit note. Next, Truth is God is a religious trust under section 12AA of the Income Tax Act 1961, providing services by way of renting of premises within the precincts of religious place, which is exempt up to. So if you are renting any precincts like community hall and all, you are renting, If the value is less than 10,000 rupees per day, then there will be exempted. Even if you charge 10,000 per day also, it will be taxable. That means if the rent is less than 10,000, that means if it is less than, if it is up to, yeah, we can say up to. Less than 10,000 means if it is up to 9,999 rupees per day, then they can enjoy that exemption. Then those services will not be taxable. So up to 9,999 per day. Very minute point here. Many of the students will write 10,000. No, they say less than 10,000. That means up to 9,999 is permitted. So these are the MCQs. Now let us have a quick look at the descriptive part. So let us try to understand. Sharkfin Limited, a registered dealer in Patna, is engaged in various types of supplies. It is not engaged in renting of cars business. The company provided the following details for the month of January 2024. Okay, what is the requirement? The requirement is you are required to calculate the GST on GST. You are required to calculate the total output tax liability of Sharkfin Limited for the month of January. So they are not asking us to determine the payment in cash. They are only asking us to calculate what is the output tax liability. And rates, if you see, car rental services will attract to 2.55% GST. Transportation of passengers by air, if that service is there, that will attract 5%. All other, apart from these two, all other services will attract 18% of GST. So now let us have a quick look at it. What supplies they are trying to say. Number one, outward supply of the goods made during the month to various non-related persons. See, if you are making a supply to an unrelated person, where price is the only consideration, transaction value itself will be treated as value of supply, right? So in the state of Bihar, see, this supplier is also located in Bihar. In the state of Bihar, that means intrastate supply is there. What supply is there? Intrastate supply. So intrastate supply, 3 lakh rupees is the market value, 4 lakh rupees is the transaction value. Which one we have to take? In case of transaction between related parties, unrelated parties, we should always take transaction value. So 4 lakhs will be our outward supply. So we have an outward supply amounting to 4 lakh rupees. So on that 4 lakh rupees, CGST at the rate of 9%, SGST at the rate of 9%. So 36,000. Next, to other states, that means they have made interstate supply. For interstate supply, market value is 7 lakh 50, transaction value is 6 lakh. Which one we will take? Transaction value. So what they are saying, goods. So they have told only 5% for two kinds of services, car renting and air travel services. Apart from that, all other services 18%, no. So on these 6 lakh rupees, 18% of IGST will come here. So outward supplies made to other states on 6 lakh rupees, 18% if you calculate, 1 lakh 8,000 will become my IGST component. Next, if you come to the next question, next point. The company pledged its 5% equity shares to the merchant banker for the purpose of proposed IPO. Pledging of the shares, that means it is a transaction in securities. Securities are neither goods nor services. So there is no goods or services involved here. There is no question of supply only. Here this activity will not be supply. Why? Because the securities are neither goods nor services. So this is a not at all a supply. Next, stock transfer of goods worth 58,000 without consideration to its branch at Gaya. Branch has been declared as an additional place of business. So they are having multiple place of businesses under same PAN for which they are operating under same registration. Will this activity get covered under Schedule 1 Para 1? No. See, Schedule 1 Para 1 will, Schedule 1 Para 2 will get covered only when the supply of the goods or services is happening between distinct persons. When we consider persons as distinct persons, when there are multiple registrations under same PAN. But here both the places of business are under single registration, this activity will not get covered under Schedule 1. So this activity will not be considered as supply at all. So this also you can ignore. Next, outward supply of services of milling of paddy into rice. Is it taxable? Yes, it is taxable. So this is 2 lakh rupees. Will it be taxable? Yes, 2 lakh rupees will be taxable, right? Yeah. So 2 lakh rupees is going to get taxable. It is an intrastate supply. So 2 lakh rupees, 9% CGST, 9% SGST. So as you could see, pledging value is nil. Stock transfer also the value is nil. So services of milling of paddy into rice, this will attract GST. 2 lakhs into 9%, 18,000. 2 lakhs into 9%, 18,000. Next, outward supply of services of giving trucks on hire to a governmental authority. See, if you are giving a goods which are, if you are giving a vehicle which is designed to carry goods to a GTA, then it will be exempted. But here they are giving a truck on hire to a governmental authority, which is for which there is no exemption. If you are given it to GTA, then there could be an exemption. But here there is no exemption. This service will become taxable. This is also intrastate. And what rate of GST you will apply? Will you apply 5 here? No, 5 is for car rental. But here the service is giving the truck on hire. So 18% of GST only will become applicable. So intrastate on this 1,50,000, 9% CGST, 9% SGST, and you have to add the totals. So this will be the total output tax liability. Clear? Right. Let us proceed further with the next question. Very simple question. Green Pines Limited, Delhi, a registered supplier, manufactures taxable goods. It provides the following details of taxable interstate supply made by during the month of March. So what is the requirement? Calculate. So the requirement is calculate the total value of taxable supplies. So value of supply, they are asking us to calculate it. So let us try to understand what they are trying to say here. Number one, list price of the goods. We will start with the list price. Okay, 15 lakh rupees. We will start with this. Price linked subsidy received from central government. Will you add it? No. Why? Because subsidies which are given by central government or state government will not be added to the value of supply. Price linked subsidy received from an NGO for a supply of taxable goods to an old age home. Will this be added? Yes, this 50,000 will be added to the value of supply. Tax levied by municipal authority. Will this be added? Yes, this will be added. Packing charges. Will this be added? Yes, this 15,000 rupees of packing charges also will be added. Next. Late fee paid by the recipient of supply for delayed payment of consideration. Will it be added? Yes, 15 subsection 2 clause E. And here you have to pay one important attention here. Recipient has agreed to pay 6,000 in lump sum and no additional amount is payable by him, which means that this 6,000 rupees is inclusive of GST. The 6,000 rupees is inclusive of GST. You have to do the reverse calculation. 6,000 rupees into 100 divided by 118. If you do that, you will get this figure. So 100 divided by 118, if you do, the amount of interest will be 5,085. So all this you have to add. So 15 lakh rupees, 50,000, 20,000, 15,000, and this interest component exclusive of taxes figure, you have to add it. This much will become the value of supply. Next. Strong Health Medical Center, a clinical establishment, offers the following services. Now, what is the requirement? You are required to examine the situation in light of relevant statutory provisions. Exemptions, they are asking us to answer it. Reiki healing treatments. Is it a recognized medical practice? No. For this, will there be exemption? No. It will be taxable. Plastic surgeries. One such a surgery was conducted to repair cleft lip of a newborn baby. See, generally plastic surgery, hair transplant services are not medical services unless they are done to restore the this congenital defects and some injuries. So it is a congenital defect. So that's why this service will be exempted. It will be considered as healthcare services. This service will be exempt. Air ambulance services to transport critically ill patients from distant locations to the medical center, exempted. Transportation of patients by whatever mode, always it will be exempt. Palliative care, this we have discussed in a very much elaborative manner. Palliative care is also for the overall well-being of the patient. This is also a recognized system of medicine. For palliative care also, exemption will become applicable. Alternative medical treatment by way of yoga. Yoga is also a recognized system of recognized medical system. So this is also exempted. Next. Sahadev and Sons, a registered partnership firm located in Maharashtra, hires a goods transport agency for transporting industrial raw materials. See, partnership firm is a specified recipient of GTA services. But the GTA has opted to pay tax under the forward charge mechanism at the rate of 12% and also issues a tax invoice. See, generally, a partnership firm is a partnership firm, whether registered or unregistered, it will be a specified recipient. So in case of specified recipient, generally RCM will become applicable unless the GTA has opted itself to pay the tax under forward charge mechanism. So in the given case, the GTA itself has opted to pay tax under the forward charge mechanism at the rate of 12%, and they have also given the tax invoice. So that's why here a reverse charge mechanism will not become applicable. That GTA only will pay the GST under forward charge mechanism. Next. Manmohan Enterprises has 2 registered places of business in Delhi. Its aggregate turnover in the preceding financial year for both the places of business is 120 lakhs. It wishes to pay under composition levy under section 10 subsection 1 and 10 subsection 2 of the CGST Act for one of the places of business for the current financial year, while continuing paying under normal levy for other. Tell me, is it possible? 100% not possible. Why not possible? Why? Because under section 10 they have clearly told that if you have multiple registrations, all the registrations under same PAN must simultaneously opt for composition scheme or withdraw from the composition scheme. There cannot be a case where you will say for some registrations I will opt for composition levy, for some registrations I will opt for regular scheme. There is no such option. All registrations under same PAN must opt for composition levy. Next. Determine the effective date of registration under CGST Act 2017 in respect of the following cases with proper explanation. Let us see. The aggregate turnover of Nakul Industries of Mumbai has exceeded 40 lakh rupees on 1st of August. On 1st of August, their aggregate turnover has exceeded 40 lakh rupees. Nakul Industries manufactures LED TVs in Mumbai and sells them in Pune. It submits the application for registration on 20th of August. They become liable for registration on 1st of August. They submitted the application on 20th of August. Within 30 days or beyond 30 days? Within 30 days. Whereas registration certificate was granted on 25th of August. What will be the effective date? Since application has been made within 30 days, the registration will be effective from 1st of August itself. Next. Agarwal Teleservices is an architect in Lucknow. Its aggregate turnover exceeds 20 lakh rupees on 25th of October. That is, this is the date on which they become liable for registration. It submits the application for registration on 27th of November. Beyond 30 days, they are submitting an application. Registration certificate is granted on 5th of December. What will be the effective date of registration? 5th of December will be the effective date of registration. Why? Because application has not been submitted within 30 days. Next one. RKT Caretakers, a registered person, provides the services of repairs and maintenance of electrical appliances. On April 1, it has entered into an AMC contract, annual maintenance contract, with a P for its air conditioning and washing machine. See, annual maintenance means this contract will run for throughout the year. As per the terms of the contract, maintenance services will be provided on the first day of the each quarter of the relevant financial year, and payment for the same will also be due on the date on which the service is rendered. So on first day of the quarter, that is on April 1, July 1, October 1st, January 1st, on this day he will come and do the service. The payment also will become due on the same date. So it provided the services on April 1, July 1, October 1, January 1 in accordance with the terms of contract. When should RKT caretakers issue the invoice? So it is very clear that there is a continuous supply of services. See, when you are providing the service on a concurrent or recurrent basis for a period of more than 3 months, it will become continuous supply of service. No, here they are providing the service for an year. So this will become a continuous supply of service. In case of continuous supply of service, then what will be the due date for issuance of invoice? There we have seen one provision. If the due date is ascertainable on or before the due date. If the due date is linked with the completion of an event on or before the completion of event. If the due date is not ascertainable on or before the date of receipt of the payment. In the given case, the due dates are ascertainable. The due dates for payment are April 1, July 1, October 1 and January 1. On or before these dates, invoices are required to be given. On or before these dates, the invoices are required to be given. Why? Because the due dates are ascertainable. And in case of continuous supply of services, where the due date is ascertainable, on or before that due date, you are supposed to generate an invoice. Next one. Mrs. Neelam, an unregistered person from Punjab, purchases a washing machine from Home Equip Store, which is an e-commerce platform registered in Delhi. She mentions a billing address in the Punjab, but requests delivery to her friend's address in Haryana. The invoice records only the billing address in Punjab and no mention of the delivery address. What will be the place of supply? See, in case of supply of the goods to an unregistered recipient, the address of the recipient as available in the records of the supplier, that will become the place of supply. So in the given case, on the invoice, only one address was recorded. Which address was recorded? Punjab is the address which is recorded. That itself will be deemed to be the address, and that itself will become the place of supply. Since no other address has been mentioned, only Punjab related address has been mentioned. So for this services, for these goods, the place of supply will be Punjab. Next, what is the place of supply for mobile connection? Can it be the location of the supplier? It's a straightforward question, right? So for mobile connection, what will be the place of supply rules? We have that 12 subsection 11, right? Which is talking about what is the place of supply for mobile connection services. That direct provision, you have to write it here. No practical question, nothing. Mr. Abhishek is engaged in the business of trading of the mobiles. He is eligible for composition scheme and has opted for the same. He seeks your advice for records which are not required to be maintained by him as a composition taxable person. As we all are aware, if you are opting for composition scheme, two kinds of records you are not required to maintain. You are not required to maintain records regarding the stock of goods. You are also not required to make the records relating to tax payment details. So these two records you are not required to maintain. Stock of goods and tax related details, you are not required to maintain any records. Clear? So that's all, guys. This is what MTP 1. Everyone comfortable with the discussion? Right. So on the same lines, we'll also try to cover quickly MTP 2 also. So now coming to the MTP 2. So here also first we will try to do the MCQs. Yes, here we have. So we'll start with the case scenario based MCQ. So we'll open the queue also simultaneously. Yeah, here we have it. Fine. So let us see. Reddy and Reddy Associates, a partnership firm. It is a partnership firm which is registered under GST, is engaged in various types of business activities. It has provided the details of the following activities undertaken by it in the current financial year. So in the current financial year, they have undertaken various activities. Its details they are giving here. It supplied taxable goods to Suryan Enterprises valuing 8 lakh rupees in the month of April with a credit period of 1 month for payment. Thereafter, interest at the rate of 12% is chargeable on consideration. The payment is received from Suryan Enterprises after the lapse of 2 months from the date of supply. So they have made a supply amounting to 8 lakh rupees. They have given 1 month of credit, but the customer is paying after 2 months from, not from the due date, after 2 months from the date of supply. So here he is making the payment. So 1 month credit period is given. He is making a delayed payment of only 1 month. Why? Because he is making payment after 2 months from the date of the supply, but within that 1 month credit period is automatically allowed by the supplier only. Only 1 month of delay he is making. So will that interest also be added to the value of supply? Yes. So what is the amount of interest? 8 lakhs into 12%. For only 1 month, it will come to 1%, which will come to 8,000. So total value of supply here will be 8 lakh 8,000. So if you see here, and here they have given an important point, all the amounts given above are exclusive of GST. Don't take an assumption that the given figures are inclusive. Take every figure as exclusive of GST only. So if you look at question number 1, value of supply made to Suryan Enterprises, assuming the interest on delayed payment to be exclusive of GST. So what is the amount? 8 lakh 8,000 will be the value of supply. Next. Coming to the few more facts here. It enters into a contract for supply of 100 office chairs goods at the rate of 15,000 with Veer Mart on 21st of August. Chairs are removed from the warehouse of Reddy and Associates on 5th of September. The date of removal of the goods is 5th of September. On or before this date, invoice is required to be issued. And they say that along with the invoice is also given on the same date. Within the due date only, they have given the invoice. Veer Mart has paid 30% of the total contract value on 21st of August as an advance. 70% is paid after delivery. Now, what is the time of supply? See, as we all are aware that in case of supply of the goods, we have a notification where the date of receipt of the payment becomes irrelevant. The time of supply will be either date of issuance of the invoice or due date for issuance of the invoice, whichever is earlier. Whether you are receiving advance payment after you are getting the payment, all that becomes irrelevant now in case of supply of the goods. So when you are receiving the payment doesn't matter here. So for 30% of the value also, for 30% also the time of supply will be 5th of September only, and for the balance 70% also the time of supply will be 5th of September only. Why? Because payment, when you are making the payment, doesn't have any relevance here in the case of supply of the goods. So if you see here, so total 15,000 chairs, right? 15,000 into total 100 chairs, it will come to 15 lakh rupees. So out of that 15 lakh rupees, 30% they are paying it in advance, 70% they are making balance payment. So 30% will come to 4 lakh 50,000, 70% will come to 10 lakh 50,000. For both the value, the time of supply will be 5th of September only. So for both values, the time of supply will be, so no, sorry, not this one. So if you see here, if I read the question, the time of supply of advance money of 4,50,000 received for supply of office chairs to Veer Mart is 5th of September. For balance payment of 10,50,000, for that also the time of supply will be 5th of September only. Next, coming to few more details here. In the month of October, it provided services by way of transportation of goods in a goods carriage by roads to Fisheries Department of Government of India, which is already registered under GST only for the purpose of deduction of tax at source. Reddy and Associates is a registered goods transport agency and charges 1,20,000 for the said service. So they have provided GTA services. To whom? To a recipient. Who is that recipient? The recipient is a department of a government which has taken registration only for the purpose of deduction of TDS under section number 51 for not making any supplies. So this will be exempted. If you guys remember the discussion, this service is exempted. On that, no forward charge mechanism, no reverse charge mechanism. It also provided services of direct selling agent to an NBFC located in Mumbai in the month of December. See, DSA services, there is one RCM provision, but individual direct selling agent services only will get covered under RCM. In the given case, it is a partnership firm, so here RCM will not become applicable. This will get covered under forward charge mechanism. If the individual direct selling agent services are getting provided to a bank or NBFC, then RCM will come, but here it is a partnership firm, here forward charge mechanism only. It organized a business exhibition in the month of December for which it received a sponsorship fee of 30,000 from Kiran Limited. Supply of sponsorship services from other than body corporate. So here sponsorship services are getting provided. The entity is a partnership firm which is other than body corporate. Recipient is a body corporate. So this service will get covered under RCM, even though the concerned person here, even though Reddy and Reddy Associates, they are the service provider, but they are not required to pay GST. Why? Because a recipient will pay the GST. This Kiran Limited will pay the GST under reverse charge mechanism. Now on these aspects, there is a question. Determine the value of outward supplies made by Reddy and Reddy Associates on which a tax is payable under reverse charge mechanism. They have given details of 3 kinds of outward supplies. Out of that, only this 3 lakh rupees will get covered under RCM. So option is 3 lakhs. Next. It has a policy to provide the free gifts to each of its employees valuing 50,000 at the end of each financial year. See, if you remember the discussion of schedule 2 para number 1, once again, gifts given by the employer to the employee up to a value of 50,000 per employee per year will not be considered as supply. So if you read the question, free gifts of value of 50,000 rupees provided by Reddy and Reddy Associates to each of its employee. Is it a supply or not a supply? It is not a supply. If you look at all the first 3 options, they are telling it is a supply, which is not a correct option. So the 4th option says it is not a supply, as gifts not exceeding 50,000 of value in a financial year by an employer to an employee shall not be treated as supply. This looks appropriate. Next. It availed services of Pradham Travel Agency for organizing a free vacation for its top performing employees in the month of December. GST of 50,000 was paid, allowed or blocked. Blocked. The GST on these services is blocked unless it is provided as a statutory obligation. Similarly, they have availed some membership of Tejas Fitness Center for its CEO, on which they pay 20,000 rupees of GST. On this will ITC be available or blocked? Once again, on this also ITC will be blocked. Right? So tell me, what is the total amount of ITC which is available in the hands of the recipient? The amount is nil. Next, coming to the 6th question. Mr. Samir from Kochi, Kerala, and Mr. Varun of Bangalore, Karnataka, visit Delhi to provide soft skills training to employees of a limited company. The training was conducted in a hotel in Delhi, and employees also traveled to Delhi to attend the training. The limited company is registered in Mumbai, Maharashtra. What would be the place of supply? Place of supply in case of training and performance appraisal services. So if the recipient is registered, location of the recipient. If the recipient is unregistered, then the place where that service has been performed. Since in the given case the recipient is registered, the place of supply will be location of the recipient, which is Mumbai. Next. Mr. Dev, a jeweler, registered under GST in Mumbai, wants to sell his jewelry in a trade expo held in Delhi. Which of the following statements is false in this case? See, he will become a CTP, right? He is registered in Mumbai, but he wants to go and participate in an expo in Delhi and sell the jewelry there. So he will become a CTP. Will he be required to take registration as CTP? Yes. So now they are asking regarding this registration, they have given a few statements. Regarding the scenario, they have given a few statements. We need to find out which one is false. He needs to get registration in Delhi as CTP? Yes. He needs to pay advance tax? Yes. He needs to mandatorily have place of business? No, this statement is false. Why? Because for a CTP, since you don't have a fixed place of business, that's why you get yourself registered as CTP. So there is no mandatory requirement to have a place of business there. He needs to file GSTR1 and GSTR3B for Delhi GSTN for the month or quarter as the case may be. Yes, till the time he got that CTP registration, for that duration, he is required to file the GSTR1 and 3B. This statement is also correct. They are asking which statement is false. So basically this 3rd statement is false. Next question. While filing return for the month of November, a firm Kiran & Co registered under GST generated e-challan on 5th of December for making payment of GST through RTGS of their bank. Determine the validity of the e-challan generated by Kiran & Co. E-challan will remain valid for a duration of 15 days from the date of generation. It was generated on 5th of December. For 15 days, it will remain valid till 20th of September. It will remain valid. Next, coming to the descriptive questions now. Mrs. Nithilan & Co, which is a partnership firm, registered in Bangalore. So they have been registered in Bangalore. They have provided the following information for the month of October. Now, what is the requirement? The requirement is compute the net GST payable in cash by Nithilan & Co for the month of October. Correct legal provision should form part of your answer, assuming the GST rate to be 9 and 18%. See, in the answer, they have done one mistake. They have done one arithmetical error they have done. So when you are adding that columns, the figures will not match here. So they have given some wrong figures here. They told 50,000, 54,000, this is fine. But when they are adding up, so here they have done the wrong totaling. But overall answer will remain the same, but there is a wrong totaling. But anyhow, let us try to solve this. We'll try to solve it from our perspective. Okay. Let me open something. Okay, so let me do it this way. I will add one page here. Yeah, here we will do. So we are required to calculate output tax liability under two columns, under three columns, IGST, CGST, SGST. And along with that, we are also required to calculate our input tax credit under three heads, IGST, CGST, SGST. And from that, we are required to calculate what is the amount of GST which is required to be paid in cash. So let us try to solve it. Quickly, we will try to do. Where is it? Yeah, here is the question. Number one, intrastate taxable supply of direct selling agent services to public sector banks. So they have provided direct selling agent services to bank. Intrastate, 2,50,000 rupees is the amount of supply. Will it get covered under RCM, FCM? This will get covered under FCM only. Why? Because the supplier is partnership firm. So it is not individual DSA services. It will be a forward charge mechanism only. And it is an intrastate. So first heading, so first kind of supply, first outward supply, direct selling agent services. Okay, amount is 2,50,000 rupees. Intrastate supply, 9%, if you calculate 22,500 CGST, 22,500 SGST. Then coming to the next one, services provided to a government authority by way of sanitation conservancy exempted. This service is specifically exempted. No output tax liability. Next, rent paid to a residential dwelling taken for running an office for providing DSA services. Owner of the residential property was not registered. Renting of residential dwelling from an unregistered person. If the recipient is registered, this service will get taxable under a reverse charge mechanism. So this is an input service on which the tax is required to be paid on reverse charge mechanism, and this tax has to be paid compulsorily in cash. So renting of residential dwelling, 25,000 they have paid. Sorry. 25,000 they have paid, on which they can enjoy input tax credit, but first before that they have to deposit that in cash. So 2,250. Next, that they have to pay it in cash. Okay, that we have to remember it at the end. Next, purchased a car for the official use of the managing partner of the firm for business use. ITC is blocked. Will ITC become available? No, ITC will be blocked. Availed information technology services for their business from partners of friend Mr. Colin Hayes from Melbourne, Australia. See, import of services for a consideration, then it will be deemed as supply. Import of services without any consideration will be deemed to be supply only when it is received from a related person, and also it is in the course or furtherance of the business. So they are importing the services from a partner's friend who will not get covered under related person definition. So this activity will not be any supply here. There is no deemed supply here. Next, there is no deemed supply. Next, provided training and performance appraisal services in Bengaluru. Two following persons. Bhavya Private Limited, registered person in the state of Kerala. So you provided performance appraisal services to a recipient who is a registered person. So location of the recipient will become place of supply. So Kerala will become the place of supply. Location of the supplier is Bengaluru. Place of supply is Kerala. It will be an interstate supply. This will attract IGST. So on this 3 lakh rupees, IGST will become applicable. So this performance appraisal services which is provided to Bhagya Private Limited, that registered person, IGST will come. So 3 lakhs at the rate of 18% per annum. So if you calculate that 18%, it will come to 54,000 rupees. Next, coming to the one more last aspect. One more, they have also provided performance appraisal services to Ujjwal Cones, a proprietorship concern of Rajasthan, which was not registered under GST. See, if it is not registered, wherever that service is performed, where the service is performed, Bengaluru. For the second case, it will become the place of supply, Bangalore. Location of the supplier is also Bangalore. It will become an intrastate supply. On this 1 lakh rupees, CGST, SGST will become applicable. Right? So on that 1 lakh rupees, on that, which is an intrastate supply, 9% CGST, 9% SGST will become applicable. Next, any other further details? No, that's all. These are all the details. There is no opening balance of the ITC also. Now we have to calculate our total output tax liability. So what is the output tax liability? 54,000 rupees here. So 522 plus 1, 31,500, 500, 31,500. This is my output tax liability. Input tax credit only I have 2,250, 2,250. Now if we start payment of the taxes, so here is our output tax liability, 31,500, 31,500. This is our output tax liability. We have our input tax credit available. How much? 2,250, 2,250. So totally 54,000 rupees. And if you take it out, 250 and 31 minus 2, 29, right? 29,250, 29,250. But you have to add one more thing. This 2,250, this ITC, we have to pay it under reverse charge mechanism, no? So once again, you have to add it back, 2,250, 2,250. This we have to discharge in cash. So net, you will get this figure only. So we are reducing, once again, we are adding it back, right? So total amount which is required to be discharged in cash is going to be 54,000 and 31,500 and 31,500. Clear? So there is some mathematical error in the answer. So that's why I have solved this here. Anyhow, let us try to proceed further with the next question. Vishwas Limited, a registered supplier, has supplied machinery to Nandan Limited, a registered supplier in the same state. It provides the following particulars regarding the same. Now, what is the requirement? Value of the taxable supply. Straightforward question you will have. List price is 5,50,000 rupees. Installation and testing charges. Should it be added? Yes. Part fitted in the machinery at the premises of Nandan Limited. Amount has been paid by Nandan Limited directly to the supplier. However, it was Vishwas liabilities, Vishwas Limited liability. Basically, 15 subsection 2 clause B, which says the amount which has been paid by the recipient to the third party, which is actually the supplier's obligation, this also should be added. Discount at the rate of 2% on the price of the machinery mentioned in the invoice. So it is not a post supply discount, it is a invoice, it is a discount recorded on the invoice itself. So 5,50,000 rupees into 2% that you have to calculate. So here they would have already done the calculation here. It will work out to 11,000 rupees. This discount you have to reduce it. Next, Vishwas Limited provides additional discount at the rate of 1% at year end based on additional purchase of another machinery for which adjustment is made at the end of the financial year without any change in individual transaction. So there is a post supply discount. This sentence is very important. This has been adjusted to the balance amount without any change in the individual transaction. That means this is a discount which can't be calculated invoice wise. They are not calculating this discount invoice wise, just they have given one bulk figure of discount and they are adjusting it in the closing balance. So this discount can't be calculated invoice wise. So this will not be allowed to be reduced from the value of supply. So only 11,000 you can reduce it. So 5,50,000, 15,000 you have to add, 30,000 you have to add, 11,000 rupees of discount you have to reduce. The balance will become the value of supply. Next question. Examine whether GST is exempted on the following independent supplies. Let us see. Services provided by a private transport operator to Shaurya Boys Higher Secondary School by way of transportation of students. Yes, this is a category 1 education institution. For category 1 education institution, inward services of transportation of students and faculty students will be exempted. So this service is exempted. Services provided by way of vehicle parking to general public, there is no exception as such. This service will become taxable. We did not read any exemption regarding this, so this service will become taxable. Mr. Vivan has a repair center registered under GST where electronic goods are repaired and serviced. His repair center is located in the state of Rajasthan and he is not engaged in making any interstate supply of services. His aggregate turnover in the preceding financial year is 45 lakhs. With reference to provisions of the CGST Act, whether Mr. Vivan can opt for composition scheme under 10 subsection 1 and 2? No. Why? Because 10 subsection 1 and 2 composition scheme is only for those people who are dealing in goods and also who are providing restaurant services. Along with that, they can also make marginal supply of services. But in the given case, this person is exclusively engaged in services. This person is exclusively engaged in services. So he will not be eligible to opt for composition levy under 10 subsection 1 and 2, but he is eligible to opt for composition scheme under section 10 subsection 2A. So basically, if your aggregate turnover in the preceding financial year is less than 50 lakh rupees, then you can opt for composition levy under 10 subsection 2A, which is a composition levy for services. So you can opt for composition levy under 10 subsection 2A. Yes, you become eligible for that. Considering the option of payment of tax available to Mr. Vivan, compute the amount of GST payable by him in the current financial year, assuming that his aggregate turnover is 35. If he is eligible under composition scheme under 10 subsection 2A, what amount of GST is required to pay on this 35 lakh rupees? 6% you are required to pay, 3% CGST, 3% SGST. So for 10 subsection 1 and 2, it will be 1 or 5%, but under 10 subsection 2A composition scheme, you are required to pay 6%, 3 and 3% you are required to pay there. Next. Karthik is a chartered accountant in practice and registered under GST. On a query regarding return filing process by a potential client, Karthik has represented him as a GST practitioner. Karthik is of the view that since he is a qualified chartered accountant with a GST registration in the name of his proprietorship firm, he also qualifies as a GST practitioner. Do you understand? Is this understanding correct? No. Why? Because just because you are a chartered accountant, you will not automatically represent yourself as GST practitioner. You have to follow the enrollment process. For GST practitioner, we have an enrollment process. You have to follow the enrollment process. Then only you become eligible as GST practitioner. There is no onus of filing any monthly or annual statements by ECO. Examine the technical veracity. Do you think is this statement correct? No. ECO required to collect the TCS is required to file one statement, and even is required to file annual return. So they even ECO operators are also required to file monthly and annual statements for TCS related details and all. Just refer to the answer. You will have a detailed discussion on what and all returns which are required to be filed here. Straight away theory question. What is the place of supply of services by way of transportation of goods, including by mail or courier? Direct question. If the recipient is registered, location of the recipient. If the recipient is unregistered, the place of handing over the goods for transportation. What would be the place of supply of services provided by event management company for organizing or sporting event for a sports federation which is held in multiple states? So if the event is held in multiple states, then the place of supply should be spread across all the states as calculated as per generally accepted accounting principles. Do you remember? So that provision you have to write. These are all theory questions. Explain the meaning of consignment value. Basically, this is a question from e-waybill. How to calculate the consignment value? So it will be including, it is the value determined in accordance with section 15 of the CGST Act, and it is declared in invoice, bill of supply, delivery challan, as the case may be. And most important thing, consignment value will include even GST also, and it shall not include the value of exempt supply. If in the invoice exempt supply is also included, its value you have to exclude it for calculation of consignment value. Able to understand? So this is what regarding calculation of consignment value. Understood? That's all. So this is what the MTP discussion is all about. Okay, right.